Hey everyone, this is Kirk here again at optionalpha.com, where we show you how to make smarter trades. And in tonight's video, we're going to go over all the trades that we made for Monday, March 2nd. Plus, we did have an earnings trade that we closed out of on Friday last week, and we did want to do a video just for one trade. So we're also going to cover that trade in HLF again, which was a closing earnings trade. So let's actually start off here with Herbalife, which is HLF. Now, we originally had the Iron Condor for HLF, and after the stock announced earnings on Friday morning, the stock opened up, was inside of the expected move range, which was great. And we had an opportunity then to just buy back the short legs of the Iron Condor. And that's exactly what we did. So we bought back just our short 38 call and our 30 put below the market, paid an 18-cent debit to buy those back. There was no point in selling the further out of the money options on either side that we were long, because if we sold them to try to get any money, they just weren't worth anything. It would have cost us more in commission to close out of those trades than to just let them expire worthless. So again, in this case, it worked out in our favor that we were only able to, or we had the opportunity to just buy back our short legs on either side, the 38 call and the 30 put, for an 18-cent debit. So it took a nice $42 profit overall on HLF. Very good trade. I was kind of a little bit worried. HLF tends to be a big moving stock after earnings, but we got pretty lucky here in the fact that it didn't really move all that much after earnings. Still, even today, it would have been profitable on Friday if we let it go all the way, but we don't play it like that. We like to close it out very quickly after the open, just to get the risk off. We're trying to just take advantage of that drop in implied volatility, which we definitely saw. So why not, why try to get anything more out of it than what we had gotten? We made $42. There's no point to hold it the rest of the day just to see it turn around or something happen and it go much lower, and then our profit completely evaporates. So we looked for that drop in implied volatility, which we got. So at that point, we're going to take the trade off and move on. The next trade that we closed out today was actually a vertical call debit spread in MU. This one's really interesting because just a couple days ago, I think it was sometime midweek last week, and the stock actually gapped open lower a considerable amount. I think it was 5 or 6%. It looked like it was going to head much, much lower. Then reverse course, and now has been heading higher since. Had an opportunity today to close it out at a 145 credit, making a nice little profit on this trade. If you remember, we bought this spread for a little over $1 credit. It's a $2 wide debit call spread. And with these types of trades where we're trading directionally in the stock and we're definitely looking for a move up in implied volatility if we can get it, we want to be a little bit quicker about how we take money off the table. So at this point, we've made almost 50% of our max gain. There's no point in holding this trade all the way through expiration just to see the stock turn all the way back around and become a loser when it's a winner right now. So again, here's that day that I was talking about. The stock actually opened and kind of ran lower down into the 29, 28 territory, then reverse course and has been on a slightly uptick since then. And so again, that's all we were really looking for. We were just looking for the stock to make just a little move higher over the next couple days, and that's exactly what it did since we got into it. That allowed us to take a nice little profit on this. Implied volatility has stayed pretty even, so that didn't really help us out in this case. But just the general stock direction moving higher is really what we were looking for. And again, that's really helped out with this position since we entered it. The other trade that we closed out of today is our Facebook calendar. So we were playing a call calendar spread in Facebook, anticipating that Facebook would head higher as it got towards March expiration. We were pinning everything around the 80 strike on the call side. So what that means is that we wanted Facebook to settle around the 80 strikes sometime around March expiration. So now that we're definitely into March, the stock's moved higher. We've made a very good profit on this trade. I think we got into this trade for around 60 something cents. And so we banked a 42 profit. So we're not close to doubling our money, but we've made almost 75% or more of our money that we invested into this. A very small investment, but at this point, we felt like it was profitable enough to take this trade off the table. These calendars, while they have big, wide profit ranges, aren't always that reliable as far as consistency. And so when you have a nice profit like these on these calendars, same thing with these debit call spreads, debit put spreads, you've got to be diligent in taking money off the table so these profits start to really stack up and add up. With Facebook, like we said, we wanted to see the stock move when we entered the position. I think we entered it somewhere down here in this territory. We wanted to see it move towards the 80 strike, and that's exactly what it did. But at this point, we're not going to just bet all of our hopes that the stock's going to stay here between now and expiration, because that would really lead us to the biggest profit potentials if the stock just stayed right here at 80. I think it's had a nice move up. That's what we wanted to see. It happened fairly early in the cycle. That's okay. So we got to take money off the table. There's no, we have no idea if Facebook's going to continue higher from here and then it goes outside of our range or reverses lower. I doubt that it just trades exactly sideways between now and expiration. So when a stock moves right into the range that you think it's going to move, whether it's early in the cycle or later in the cycle, you got to be diligent and just taking money off the table and banking that profit. All right, so the other opening trade that we had today, really like this trade in JCPenney. We've been actually pretty successful trading JCPenney to the downside over the last year and a half. And so we're just going to keep doing it, right? We're going to go back to the well that's been working for us, and hopefully it will continue to do so. We traded the April contracts because March is just a little bit too close right now, so we're going all the way out to April. And we did the 9-7 put spread. So it's a $2 wide put spread. And with our cost of about $1.04, that puts our break-even point right under about $8 or so. So that's ideally where we want the stock to trade, somewhere between now and April expiration is just under $8. And the reason I like this trade is because the stock already is trading under that $8 window. So our break-even point is right here at $8. We've got just a little bit of cushion between where the stock is now at $7.85 and where the stock, our break-even point on the position, is at $8. So I really like this trade. I think that once we have a nice clean signal here in MACD that it could be heading lower, we're going to probably get that break lower in MACD maybe tomorrow. Implied volatility is really low, and if it does start to head lower, the stock heads lower, then we could see a move up in implied volatility over the next month or so. But I just really like the chart action on this trade. And again, it's not to say that, I know where the stock is going to go or isn't going to go. I just like the fact that it's, had a nice breakaway from its last trend, and it continues to try to rally up higher. So notice yesterday it tried to rally and kind of regain some steam. And yesterday it just got crushed back down. And then today was just a huge loser, right? So today it opened up well above 850 and then closed all the way down at 785. So just a really tough day for the stock. And so we're just hoping that it just continues to move lower over the next month or so. And that's really what we're betting on. And very small bet in JCPenney. Our max risk is only $104. So it's not a huge part of our portfolio, but we definitely want to be bearish in that stock, at least right now. So as always, I hope you guys enjoy these videos. If you have any comments or questions, please add them right below. Until next time, happy trading.